Is the US entering a foreclosure crisis? Now, foreclosures are up 4% year over year in Q4 of 2024, and the market is not nearly as competitive as it was a few years ago, leading many people to believe that the US housing market is going to experience trouble because of this increase in foreclosures. Now, in this video, I'm going to go over a few sources here, show you some graphs, and you can make the decision for yourself. Do you think we are entering a foreclosure crisis like we saw in 2007, 2008? Or is this increase in foreclosure activity a return to norm after pandemic stimulus? You will be the one to decide. But before we get into it, my name is Liam O'Reilly. I'm a realtor with Jerry Riley Real Estate. If you have any real estate needs, reach out to me directly. All of my contact information's in the description. And let's get into the first source here. So this graph out of Statista, I think is how it's pronounced, foreclosure rate in the United States from 2005 to 2023. So this isn't this year, this is last year. We see that foreclosures were up in 2023 at a 0.26% rate of foreclosure. So increase from 2020, increase from 2021, increase from 2022. And you see that graph is trending upwards. But when we take a look back to 2008, 2009, 2010, we're at about a tenth of the level of foreclosures that we saw during those years. So we're still well below the 2007, even 2005 foreclosures. We're about half the rate of the 2005 housing market in terms of foreclosures. So even though it's increasing and trending upwards, we're still not quite there as far as the crisis that we experienced back in 2007, 2008. We're not near those levels yet. Now, when we take a look at the increase in activity that has a lot of people concerned, including the title of this article here, which is very concerning. U.S. foreclosure activity increases quarterly in Q1 2024. When we take a look at what they're talking about here, 67,000 and some change U.S. properties started the foreclosure process in Q1 of 2024. That's up 2% from the previous quarter and up 4% from a year ago. So the people entering foreclosure the foreclosure process are up year over year and quarter over quarter, right? It's trending upwards. And some states it's trending upwards drastically, like New Hampshire, Illinois, Florida, Rhode Island. Now, one thing I wanted to highlight is that even though these states saw a drastic percentage increase in their foreclosures, we are exiting an era of COVID level stimulus. So these are drastic percentage increases year over year off of what were historic lows in foreclosures. And when we take a look at this graph here, so the foreclosure starts that they're talking about in Q1 of 2024, that 4% increase is right at the end of this line here that I'm showing in my cursor. So you can see when we entered the great financial crisis, the foreclosure starts were skyrocketing, shooting upwards here over on the left side of the graph. And now, even though they're increasing slightly, that 4% increase quarter over quarter, you can barely even notice it on the graph. And in fact, we're still below 2019 levels of foreclosures. So even though foreclosures are increasing, we're well below levels of the great financial crisis, and we're not trending in that direction, at least not right now. So when we take a look at some other statistics in regards to foreclosures here, we see that lenders repossessed 10,000 U.S. properties through foreclosure in Q1 2024, up 7% from the previous quarter, right? So trending upward from the quarter, but it's down 20% from a year ago. And take a look at the graph. Again, when we take a look at the 2008 great financial crisis on the left side of the graph here, we see that huge spike in completed foreclosures. And then we see where we are right now. There's not many completed foreclosures. And a lot of that has to do with how much equity homeowners have in their properties. We see the loan to value ratio across the United States, which is what this graph is showing. Only 11% of properties have less than 30% equity in their home, right? 70% or less loan to value, meaning the loan covers 70% of the value of the home and the homeowner has 30% equity. Only 11% of homeowners across the United States have less than 30% equity, meaning that 89% of homeowners in the United States have more than 30% equity in their home. So if they need to sell, they could sell for a 30% discount, 89% of people, at least a 30% discount off of market value and still not have a short sale, still not be underwater on their mortgage. Now, there is There are still people who don't have that equity. There's a handful of people that have negative equity that owe more on their home than it's worth. But we're talking about 1% of homeowners out there, right? This is not a very large portion of the homeowner population. Now, when we take a look at a few more stats that I think are pretty telling, the average days to complete a foreclosure. Back in 2007 and 2008, it took about 180 days, maybe even less, to start the foreclosure process from when the foreclosure process started to when the bank took your home. It took, 6 months maybe max back in the great financial crisis. Now it increased as the financial crisis progressed and pushed out to about a year. But when we take a look at where we are today, it takes 736 days on average from the start of the foreclosure process, right? This 4% increase that we saw, though that for those 4% of homes, it's going to take 736 days, over 2 years, to complete the foreclosure process. So even if foreclosures were spiking drastically, like we saw in 2007 and 2008, then we would need to wait 2 years before that flood of inventory came to the market. But at the same time, it's increasing, but it's not increasing drastically. It's staying relatively flat. We're still below 2019 levels, and we're not seeing a massive trend upwards. Now, a lot of people are concerned because foreclosures are increasing, and combined with how high the consumer debt is. When you take a look at credit card debts, when you take a look at delinquencies on the rise, delinquency is increasing for maxed out borrowers. More people are maxing out their credit cards as CPI is high. People are struggling to pay their bills. I'm using a little bit of speculation here, but when we take a look at data from 2015, we see that most people who are renting are the ones who are delinquent on their mortgages. When we take a look here, of the 96 million renters who have never had a mortgage, 42% have debt in collections. And this was back at, this was back in 2015 before the debt levels got this high. So again, I don't know exactly who is delinquent, and the Federal Reserve of New York doesn't break down exactly if renters are more delinquent, if homeowners are more delinquent. And it's understandable to be concerned for the US economy as credit card debt rises and as delinquencies rise as well. But what we're seeing in the data right now is that most people are still paying their mortgage. Even if foreclosure starts are up slightly year over year, they're not skyrocketing upwards, and they're staying, relatively flat, still below pre-pandemic levels, which is a strong sign for the US housing market. And then combined with how much equity homeowners have in their properties, most people can sell and get out from their mortgage without having to be foreclosed on. Now, this is my opinion of the data. And when you take a look at the graphs, in my opinion, it's pretty telling that we're nowhere near the foreclosure crisis that we saw in 2007, 2008, even though foreclosures are ticking up. But again, I said in the beginning of this video that you can be the judge. Take a look at this data. All the information is in the description for you, and come to your own conclusion to make the best decision for you when it comes to buying or selling a home. My opinion is that we're not going to see a flood of foreclosures like we saw in 2007, 2008. If we do see the foreclosure starting to skyrocket, then we can expect in 2 years from now, so we're talking about 2026, 2027, we will start to see more foreclosures hit the market. But foreclosures are only up 4%, or foreclosure starts are only up 4% from Q1. And in fact, when we take a look at the March data that they have listed here, I have it highlighted right at the bottom, 20,000 US properties started the foreclosure process in March of 2024, up 3% from the previous month, but down 4% from March of 2023. So, it was up for Q1 as a whole, but down in March year over year. So it's very, very interesting here. Anyway, thank you guys so much for watching. I really appreciate it. Leave me a comment. Let me know what you think. Do you agree with my analysis? Do you think we are going to enter a foreclosure crisis? I'd love to know your thoughts in the comment section. Thanks for watching, and I'll see you in the next video.